USD yen. Okay, here again, no interest rate changes expected. You know, Japan still wants a weaker yen. Just because the central bank wants something or the finance minister wants something doesn't mean traders are going to give it to them. In fact, a lot of times the traders will try to test their metal a bit, especially with the new guy. Japan is still not going to surprise anybody. Its economy is in rough shape. The data is much weaker coming out of Japan. However, one of the things that we've noticed in years past, and not so much during the immediate crisis, but we're getting kind of back towards a little bit more of a normal market dynamic. And when equities markets undergo weakness, a lot of times that money will go to the yen. So we need to keep a good eye on this because I think we've seen it in the last few days with the yen pairs, the USD yen, the euro yen, and the pound yen have all gained or fallen off, but effectively gaining in the direction of the yen. Because that money is trying to find a safer place to live. The equities are, at least experiencing a few days of trouble, if not the beginning of a medium-term, shorter-term to medium-term sell-off, and that money wants to find a safe haven. So a lot of times that money ends up going to the yen. So something to keep in mind. Even though it hasn't been bullish as I expected, we're still very much in the range on that pair. So I'm not worried. In fact, I see some interesting possibilities in this chart as well. Okay, so last week we talked about this longer term down sloping trend line, which we broke. And remember, when we break a trend line, I expect a consolidation. So another thing that we'll oftentimes see on a long-term trend line like this becomes almost like a support and resistance kind of mirror. So it was resistance here, it broke. Now we're coming back down. We actually tagged up. We touched that line just a bit. Let's go down to the daily and we'll see how close we came to that line. Yeah, I mean, we touched it. We tried a few times to get there. We finally touched it. Since we touched it, we popped back up. Let's go down to the 4-hour chart even to get a little bit better idea. And the trend line's down below our horizon here, but yeah, so we went down, we touched it, now we've popped back up. So within the context of the expectation of a range, here we are, we're in this range. And that range could even go down as far as here, but I think it's pretty well contained right in this area. You could wait for it to try to come down and touch this line again or test that low. You could take a trade here around in this area with a stop just on the other side of this line, maybe 50, 75 pips out, and look at it to come up in this direction. Worst case scenario, if it gets back inside of this trend line, I would look for it to come down underneath here. You might take out your stop. Then it'll come up and try to test this line again to see if it'll get above it. That's your opportunity to try to take a short. And once again, put your stop up here, 50 to 75 pips out, and try to see, have it come down to test this line. If it breaks this line, I think it could come all the way down to here, which would be a 350, 400 pip trade for you. So there's some very interesting trade possibilities right in here. Once again, go to your shorter term charts, look at your system, and figure out from your system where, if that's a long or if that's a short for you. But I think the play back and forth across that line offers people that want to go either direction some very interesting possibilities for setups. So I still believe that, as long as we stay within this range, I think eventually we're gonna, it's gonna bounce, and we're gonna at least come up outside of this range, and maybe even try to get to 100. At which point all bets are off. So that's kind of my short on USD yen. Once again, do your own homework, but I think there's a lot to work with there.